Good morning, everybody. Welcome to the Flow Show. Monday, I've got my date here, 17th of November, and a busy week awaits as we're finally going to start getting some US data down the pipe. So it's going to be a very, very interesting week in the latter part. Morning, Kay. How's your weekend?
Morning, Ryan. Good morning, everybody. Yeah, the weekend was, how shall I say, relatively quiet. Oh, I did a little tour at Majestics, they do Black Friday sales as well. So if you're interested in getting some decent wines for not too much money, I mean, it's the time of the year to go, mate.
Oh, anything left after you went?
Yeah, just in at the bottom end of the last shelf, I've left 6 bottles for you, mate.
and loads of empty boxes. Yeah, no doubt. Right. Okay, there you go. Get your wine stocked up for the rest of the year. Go long Majestic stock. That's what I'll say, especially if Kay's been down there. Right, let's get cracking. Going to kick off, as we always do, in China. And just in case you weren't aware, there's been a little bit of a bum fight developing between China and Japan, a little war of words going on due to Takaichi's comments the other week about how they might need to step up if China went into Taiwan, and they'll be forced to get involved, and China weren't happy with that. This is all very tetchy stuff between these two. China's been moaning and groaning about it since then. Japan have sent over a emissary or whatever to China to explain those comments. But yeah, there's a little bit of bad blood going on there at the moment. China Foreign Ministry has told their nationals to avoid travelling to Japan in the near future. And actually, Chinese tourists are quite a big part of the tourist industry in Japan. So that will have potentially some economic ramifications. Speaking of economic ramifications, we had some GDP data out from Japan as well, Q3 numbers. They were expected to come in negative, quarter-on-quarter GDP expected at minus 0.6%, but that came in better at minus 0.4%, same for the year-on-year number as well. Flash number for CapEx, though, was up at 1% from a revised high 0.8% previously, but otherwise a little bit of softer numbers there in GDP, but not as much as expected, which is sort of good news on that front. We had the economy minister Kiuchi out about the GDP, speaking about GDP, saying that those numbers make no change to the view that the economy is gradually recovering. This all was expected, as I say, this negative number, but it hasn't spoilt their plans and what they think the economy is doing. Now, we have also had another advisor out. Takaichi's got this team of advisors, various economists, ex-BOJ members and the like. We heard on Friday that from Kyoto that they were looking at something over a 17 trillion yen package as far as their stimulus plans. Well, this government panel member, as he's being called, Kateoka, says that the government must compile a stimulus package sized around 23 trillion yen for spending and tax cuts. Now, remember, this is just an advisor. He's not the government, and whether they listen to him or not is another question. But he says the government can fund a 23 trillion yen package with 10 trillion in new bond issuance and 13 trillion from taxes and non-tax revenues. He also weighed into the BOJ, saying the BOJ should move cautiously in its normalisation, and says it would be premature to hike rates in December or January, and that they should wait till at least March or April next year to raise interest rates. Now, he's not the first advisor in this group to talk about the BOJ. We had Aida the other week saying that they shouldn't hike in December and maybe leave it to January. So there's some differing opinions over the timing, but they all say pretty much that they should delay. Again, these are just words in Takaichi's ear, and they don't have any effect on the BOJ, who can do what they want when they want within reason, shall we say. He also said about the yen that excessive yen falls are undesirable and Japan should not rule out FX intervention in addressing such moves. We also had the minutes of Ueda's meeting with Takaichi the other week, where he said that the bank is pursuing an interest rate level that ensures a smooth landing. He said that underlying inflation remains below target, therefore maintaining a accommodative monetary stance is appropriate. He said keeping monetary policy too loose for too long carries risks for achieving the 2% target. And said achieving 2% sustainably also means inflation significantly exceeding 2% might be troublesome. So he's talking all sides of the coin in that meeting with the new PM. Kay, should we get too much involved with these advisors? I mean, there's about 10, 15 of them. They've all got an opinion. And they are just that, though, advisors. If it was Takeichi coming out and saying that's what she's doing, that's a different kettle of fish. Do we have to be careful with these opinions?
I think we need to take them into account because she is the one who chosen those people. So in a way, yeah, okay, they may come up with we need to take the numbers with a pinch of salt, but I think if the one says 17, the other 23, for instance, we shouldn't be surprised anything coming up, a number coming up which is 20 or above, right? Trillion yen. So because she actually chose those people, right? Especially the Kataoke guy is an ex-Bank of Japan member during Kuroda's tenure. He was a Dove. He still is a Dove. He actually, the week before she chose him, he gave an interview to, I don't know her name, but a person, a lady who interviews a lot of central bankers or ex-central bankers, and he already said something about the Bank of Japan not needing to raise rates. So he's always going to err on the dovish side of things. Is it something that we need to take into account? I would say, looking at the market, not a lot. It's just continuing to give that how shall I say to give those numbers out and just confirming that Takaichi will come up with a pretty big package. So overall, it doesn't change, but it just confirms that it's going to be a pretty big package, I think. And then yeah, I mean, we all know that Bank of Japan is the most independent central bank amongst the major countries. So Ueda already, as you say, I mean, yeah, we will continue to hike rates, but we need to remain accommodative. What does that just tells us that they are not going to be in a hurry, right? And at least not going to go very far either.
Yeah, well, I think these advisors, I think they're going to be good to give us a ballpark of what a figure
Yeah.
might be. I mean, if we get another couple out who say, oh no, it should only be 10 trillion, then they're going to be, then the ballpark might shift a little bit lower. But yeah, they're all going to have an opinion. As I said, even there's a difference of opinion between this guy and Aida over when the Bank of Japan should hike, and those sort of comments probably not going to change what the Bank of Japan do anyway. So it's about picking out the pieces from these bods and seeing what's important and what's not. Right, moving on from those guys, we had some data out of Switzerland, some GDP data for Q3 coming in minus 0.5%. Now, there's a bit of skew with these numbers because these numbers were adjusted for the recent sport events that happened in Q3. They did the 2025 Europa European Championships for women's tournament. So that was going on over there and other bits and bobs. So they've adjusted that number to take out those one-off effects. Still a little negative at minus 0.5%, which is something the government will be looking at. On top of that, they got their trade deal done with the US, 15% tariffs, and apparently they're going to be investing 200 billion into the US. We'll wait and see what timeline that there is for that. Probably over the next 500 years or something silly, but that's coming anyway from Switzerland apparently. Now, getting back to China, we had the Vice Premier He Lifang coming out saying that dialogue with German Finance Minister Klingbeil was a complete success. And then the German Chancellor came out saying China is becoming outwardly more aggressive and inwardly more repressive. So I don't know how that's going to go down with China. They've just had a nice meeting with the Finance Minister and then been shot down by the Chancellor. So we'll see how that bum fight develops. Fed Schmid said further cuts will not patch cracks in the jobs market and it could do damage to inflation. This is my rationale for dissent in October continues as I head towards December. It says inflation is too hot, the labour market is cooling but largely in balance. Policy is modestly restrictive and where it should be. Fed Miran, his dovish self as always, saying the Fed says the data supports rate cuts. And that the data should make the Fed more dovish. Fed's Logan says supported a September cut and would have preferred holding steady in October. And for the December meeting, it would be hard to support another cut. We would need convincing evidence of inflation coming down or a worsening labour market to support a December cut. New York Fed's latest seaweed in the shed for Q3 had growth at 2.31, unchanged over their prior report. Their Q4 forecast is also unchanged at 2.1%. There's no real movement there. Or maybe another bum fight brewing over rare earth materials because apparently China's got some export controls on yttrium. I think that's how you pronounce it, and that's causing various shortages going on. It's reported by Reuters on Friday, so something else to worry about there. Right, important stuff. The data. We're getting some data this week. We are going to get the NFP, the September NFP on Thursday. That's been confirmed by the BLS. We're also going to be getting the wage data as well. They will update as they get the data ready on the next numbers to come. So it's NFP this Thursday for September, which should all be compiled, so it shouldn't be too much of an issue in terms of what we're getting. The Commerce Department says that the second reading of Q3 GDP will come the 26th of November. We will also be getting the October PCE data on that date as well. I don't know what they're doing because we haven't had the September PCE, so I don't know if they're going to amalgamate it all together. We're also getting international trade, October's numbers coming in December. The third estimate for GDP will be on the 19th of December. And the November PCE will be released on the 19th of December. So that's, I think that's the week that we get a lot of big bank meetings as well. So we're getting some data coming in, other bits and pieces will be dropping. All your calendars will be updated or should be updated by now. Over in Russia, Trump has said, or the foreign ministry has said, that Russia is ready for a Trump-Putin summit in Budapest if it will be well prepared and based on agreements reached in Alaska. Meanwhile, German Chancellor Merz says he's looking at all options on using frozen Russian assets. This is another thing they've been talking about forever, but seemingly no closer to doing anything about it or using them. That will be a big step for them, and we'll get a response from Russia. There's also been some shenanigans apparently in Poland on a train line that runs into Ukraine from Poland. According to PM Tusk, there was an explosion that took out some of the track, which he's blaming on saboteurs, namely from Russia. So that's something that's developing as we sit here now. That's about it on the news front. Nice and easy. Kay, anything else?
Oh, no. The rest is secondary. I think you covered everything.
Good. Right, so let's have a look at the calendar to see what else we're getting, because it is quite a busy week. We're getting Empire manufacturing data today, because that's run by Fed regionals. So we'll be getting that. This kicks off the manufacturing week for that. That construction spending, I think, has been delayed. That's coming out next week, but I can't remember, not that many people look at that anyway. So some of this data we won't be getting just yet. It's still on the calendar, but we won't be getting it. RBA minutes, we pretty much know what those guys were up to. We've had stuff out from them. Got a bit of Japanese data out tomorrow as well. Wednesday, quite big for the Bank of England. We get CPI, PPI out. And that's probably going to be something that will feature in the upcoming budget as well, seeing what inflation has done. Politicians like to make a claim that they're either going to fix inflation or they're the reason why it's coming down, which is obviously complete bullshit. They have no control over inflation whatsoever unless they're dealing with the money supply and things like that. Anyway, we won't probably not be getting those housing starts, and I say that goods trade, international trade balance not coming out either. FOMC minutes, probably nothing we need to worry about because we've already heard a million times from Fed heads since then. Thursday, just that Eurozone CPI number, that'd be the final number for that there for October. So on to Thursday, we get the NFP. It should be in full, so we should get everything, unemployment rate and whatnot coming from that. Now, this is going to be where it gets messy. We have been expecting at some point to see the Doge cuts dropping in because all the contracts ended in September. Whether they were counted in time or not, or it's affected, we don't know. We don't know how many, or whether it's going to come through in the October numbers if we get the October numbers at all. So we could have some shenanigans here. What I would suggest going forward, when you watch the NFP numbers, look at the splits. When you get the headline NFP number, it's made up of private payrolls, government payrolls, manufacturing payrolls. And the NFP number is the net of all those. So keep an eye on the splits, particularly the government component. If we get a minus 500,000 NFP, it's going to look really bad. Okay, if 400,000 of those were government jobs and they've all gone back in or whatever, then the data might not be taken as bad as what it means, because we sort of already knew about the potential for those losses. So that's how you're going to have to go into this number and look through the details. Now, there's going to be people that say, well, this is September data, it's old, we're now in November. That's as maybe, but this is going to be the first data we're getting. This is going to be justifying whether the Fed was right or wrong to go and cut rates in October. This will justify what the market thinks about December. We're sitting 50-50 at the moment. So this data, old or not, has the effect of giving us some big swings in those rate expectations. So forget that it's old data, it will move the market, and it's going to be the first major data we get since the shutdown. It's going to be important. Okay, but we'll talk about that in more detail later in the week. Philly Fed manufacturing, that again, the second data that we get for the manufacturing sector. Initial jobless claims, they could be back up and running by Thursday. I haven't looked at any of the notices. Well, I haven't seen any of the notices from the Labour Department, but that's back on a few other calendars as well. Apart from that, Japan's CPI comes in Thursday evening, so we'll keep an eye on that in regards to the BOJ. On Friday, we get retail sales from the UK. Now, this could be important as well because we've had 4 straight months of gains. And the last time we had 5 straight months of gains was straight after the first COVID lockdown, when obviously everything opened, and not surprised to see a run of positive numbers. Now, I thought this was going to be a bit soggy last month, which would have been September data, but it wasn't. It was strong. Few calendars expecting another rise, only a 0.1% rise. So nothing major, but it would be significant if it's another positive. Conversely, if it craps the bed with the market mood at the moment, we'll probably see the pound getting clobbered once again. Then we get all the flash PMIs coming out as well. So that's going to be a busy end to the week, and that will include those US numbers later on as well, and the Michigan consumer sentiment too. Kate, anything else on there, or anything you've got your eye on?
Well, I guess we are going to have to be concentrated for the second half of the week because this there's going to be moves on the back of those data. As you say, I mean, it's the first real jobs data, apart from those other reports that we had, which were showing a pretty negative picture. But this is, yeah, the market will absolutely move on it because, as I've been saying before, money managers did not have official data to stick into their models, and those will be important. And I think then, especially, well, FX will move obviously, but the bond market has been very quiet and waiting for those data. So that's going to be an important one. However, whether the numbers are, yeah, the details will be important, but the headline numbers will be equally important, in my opinion, for those people. So we will see moves on the back of them.
Yeah, very much so. So I'm expecting a pretty volatile session.
Oh yeah,
We'll all be covering that live on Face, of course. So make sure you're there on Thursday. It's going to be a whopper. Maybe one of the biggest movers we've seen for quite some time, but I don't want to give it the kiss of death and then it ends up being nothing. Let's hope for some volatility. Anything else on there that tickles your fancy?
the UK data, as usual. Now we are getting closer and closer to the budget. Those UK data will put pressure or alleviate the pressure a little bit. But pressure there will be all the time. But yeah, UK. I think the Japanese. I mean, the problem with those Japanese data is you they rarely move the needle for markets, right? Markets has a view on the yen and trade the view, and whether the CPI comes in zero point 0.1 above, below, or also expectations, unless we got a big variation, they don't really move the needle a lot, right?
Yeah, exactly. And they do follow, these numbers do follow the Tokyo CPI, which is the first
Mm,
date of the new month. I think that comes out next week, if I'm not mistaken.
yeah.
So we'll look at that next week.
Yeah,
Right.
and Tokyo is a big chunk of of the
Yeah.
Japanese market, obviously. Yeah.
Yeah.
Just want to say something. Yeah, if you want, you can already put up charts if you. But I'm looking at a 1 week euro dollar. We're still just around 6% on the vol in the options market, which is not a lot, right? I would have expected that to be a bit higher with the expectations of those numbers. So the options market is still not worried about anything, at least not in euro dollar.
Yeah. Let's go into the vols, make it easier. Yeah. So there. Yeah. I mean, we're back up in the 1 month. We're back above 6%, which
640,
is good
yeah, but
news.
that's the 1 month. But if you look at the 1 week, who should cover those US jobs data, it's around 610, right? Which is a little higher, but nothing spectacular.
Yeah.
Still pretty reasonable.
Yeah. Which will bring a bit of fun because if we bust out of those ranges, that'll probably get the option players up and running and tinkering around. So yeah, could be a good one. Could be a good one. Right, and of course you can get this option widget live on our dashboard, as you can see here. These are the ones I look at mostly. The 1 month for these three pairs just tells you whether things are getting a little bit more busier, or you can expect bigger price moves above 6-7%. We're getting into higher volatility territory. Below 6%, if we're nicking into the fives, that's when things really are quieting down. So you can keep an eye on that on our dashboard. Right. Anyway, let's move on to what's going on. Dollar yen. Where am I getting that one? We're back up, nodding towards this 155 level. Why all my moving averages switched off? Because I was looking at yields. That's why. Kay, do you think this 155 is still going to be? It's going to be for the market, but do you think it's going to be a trigger for these guys to intervene? If it's a
No, well,
quick shoot
it's
up,
yeah, the volatility has quieted down, right? But has to be said that when you look at well, dollar yen for one, and but even with the dollar doing a bit better, euro dollar has stabilized, cable as well, etc., etc. But yeah, those crosses are remaining big, right? And so we don't know yet what the new MOF really wants to do, but Kataoka he actually told the MOF, you do whatever you like, but we don't like the weaker yen. Obviously, as I said last week, they are shit scared about what the market is going to do with the yen with such a stimulus package. So they need to keep the warning levels relatively high. Um, but that should slow down the advance of the dollar yen or yen pairs. But just doesn't change. It's beat. I I I wouldn't think that anything really changes unless we start to get back below 153, 152 and a half on the dollar yen for the medium terms. I mean, day traders, it can go up to 55.10, then down to 54 and a quarter. Yeah, okay. But if you look at it more from a bird's eye perspective, it's yen pairs are still bid. I mean, yen is still offered.
Yeah, very much so. This could be interesting. We're up close to that 155 again, and so that'll be a interesting one to keep an
I
eye
think,
on.
yeah, I think if we get a quick rush up to 157, 158, then we are going to be needing to be very careful.
Yeah,
But if it stays here and the real advance is 15, 20 pips a day, is it really going to trigger them coming in? I never say never, of course. That's why whatever I do, if it's in the sense of being short yen, my stops are going to be very close, just not to look at a 200 pips hole on the first intervention rumors or trigger, right?
yeah. I think when you can see like the speculation side of things, it's when you get that grind, when it
Mm,
it just like you say 10, 15, 20 pips over a few hours, and it just doesn't dip and it keeps going. That's when they sit up and take notice. When it's just grinding, 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 that suggests people are just sitting on the bid and hoovering it up constantly. That's something they don't like. As Kay mentioned, and we should be looking at if you got a chart on the go this week, keep your 10 years in focus, particularly over that jobs data. This is going to be very important. We're stuck in this tight range 4%, 390s, and 420s. Keep turning around the middle of that range, 408s, 409s. Where this one goes, where this one finishes the week, is going to be important because we are 50-50 on those rate expectations for December. We're open to going one way or another. The market will not want to go into the meeting on a 50-50 basis, and that will just make the price risk binary either side. But if we get bad data and we're busting 4%, then the dollar's going to be taking a little bit of a wobble, and that could help drag down pairs like dollar yen as well, which
mm,
in turn could make them a bit of a dip buy. That pair, a bit of a dip buy, if we
mm,
still got the yen weakness going on. It could be one of those things, Kay, where you trade it one way, Europe, US, and you trade it another way when it goes into Asia.
mm. Yeah. It's it's wide open now for the bond market. I think it's really wide open because, as you also said, I mean, the details are going to be important as well. You're going to have like a move on the headline number and then the details. Yeah, and stuff like yen indeed. If it's let's say mildly negative report, like I mean, yeah, the government cuts show up, but that's it. It could be that the headline number drags dollar yen down a little bit, and then you will indeed find deep buyers again, if that would be the scenario or the outcome of the data. Yeah. Watch the tens, but also watch the 2 year, I would say, because that is the closest one that we can um, where we can really find what the short-term market is expecting for rate cuts, etc. And the 10-year, as Ryan says, is going to be very important because the money managers will try to form an idea on how things will go forward. So two's really for the short-term, immediate Fed action, yes or no, and then the 10-year for what the market is building in as expectations going forward. Yeah, and I still think it's going to be a big week for bonds, and yeah, there will be moves. Yeah.
Yeah, absolutely. Right, I haven't been looking at too much this morning because I've been in a ton of meetings. So have a quick look at euro dollar while we're here. Let's just zoom it in a little bit. Um, this one's just nicking back under the 116 level. We had this rally on late last week, Thursday and Friday. It held up, but it's running out of puff again. Kate, is this just yet again? It can't hold the rallies, but it's not dipping too far.
Mm, yeah. Um, that 116.5, 116.70 is a pretty decent zone, and it did it did stop there. We also had most of the more hawkish Fed members out. They are all pointing at a pause. Expectations for rate cuts have been screwed back, so all of what we see here is an effect of where the market changes or adjusts its positions. It's going to be wide open. And I wouldn't be surprised if we see just a little bit more of dollar recovery somewhere. But are we going to be very far away from 115 and a half, 116 or so, if 116 and a half, somewhere around there? I wouldn't be surprised if we go into the number, bang on 116, for instance, which is not too far from halfway of what we have seen of late. Wouldn't really be a surprise at all to me. The problem also with the euro is that, and there we come back, is that the numbers are still very sluggish, right? We don't see much growth. There's a bit of discussions always going around budgets, around what do we do for Ukraine, what do we do here and there. Everything gets slowed down. Now there's this I think it's fighter jets also between Airbus and Dassault. The Airbus based in Germany, of course, and then Dassault in France. They're also not getting along the same line. There's always something in the eurozone that holds it from really taking off. And so for as long as that continues into the data, I would be surprised if the euro really, let's say, I'd rather think that we're going around the into the US numbers around here, or maybe even a smidgery lower than around 117, for instance, because there's little reason to get up there right now.
Yeah, yeah, I agree with that. And there's still context needed. We're still holding this year's trend. This is
Hmm.
just a
Hmm.
pullback. Still, I think one of the few pairs we haven't managed to get to the 38.2 of the year's rally,
Mm,
like some of the others. So this is just, I would almost call that consolidation after
mm.
coming off those highs, and this bounce could just be part of this more shallow downtrend. But yeah, I think this 115, we had a little look under it before. It didn't last. We didn't go that far under it. Still think it's a key level as to whether we're holding above or below it. So yeah, test
And
down there.
mm.
You go, mate.
And the problem is that with those kind of low vols now, everybody thinks that a 30-point move, a 20-30 point move is something big, you know.
Yeah,
I would really well tell our audience that, I mean, what we're seeing here are not big moves. If you look at the medium and longer term vol, we are very, very low in stuff like euro dollar. And it's a bit logic, because if you look at it from the other side, if you don't know what to do with the dollar, or as we have seen, people like thinking that really the jobs picture may continue to deteriorate in the dollar, what do? Well, you jump onto the next biggest block, which is the euro, right? That's always going to be a bigger part of whether it is central bank reserves or bigger money managers. They if you don't want the big block, you go on to the second one, and then the next one, and then the next one. Importance, and that's also why we are seeing this euro dollar being extremely stable. In fact, it's rare. Well, you get a 1% move over a week, and then you stabilize, or you come back into the middle, like we have seen again. You do one move, and then you somewhere gravitate back to somewhere around the middle point. And that, I think, is if if you really wanna if you're really a speculator and more like hit and run, there may be better stuff to do than the euro, you know.
Yeah,
Other stuff
absolutely.
will move faster, and then I'm thinking about the dollar yen, for instance, or you may be thinking about cable or something of the likes.
Yeah, exactly. Because this is the fundamentals in a nutshell. You've got Europe, the ECB, they're on hold for the
Yeah,
foreseeable future. Inflation's where they want it to be. Okay, the economy could be better, but it's not getting worse yet or at the moment. So there's nothing to do. There's no expectation really for the market to trade. Whereas in the Fed, in the US, we got lots of stuff to trade. The shutdown, the data, Fed 50/50s, and what they're going to do next year, and all the rest of it. So that uncertainty brings the volatility. But from the euro side, it's a bit of a lame duck at the moment. Right, mate, I'm going to get it over to you.
yeah, sure.
I can find the button. That one there.
Oops, what am I doing here? I'm just going to run through a few things because obviously we are waiting for those numbers, right? And if you look at it, even the cable is now stabilizing around this one just above that 130, 140. But if it's actually more becoming a magnet than a real big level to trade below or above. We are stabilizing, right? And but the thing is, more medium term, we are still in a more negative picture, right? For as long as we are under 132, 1015, 0515, I would say that is the first level that if we get there during the course of the week, where we really will need to pay attention to what is happening in the cable, because if we get above, stay and hold above here, could be that we are back on our way to 133s. Okay, that for the rest of the week, because if we don't see, because the UK data are going to be very important, but if you don't see anything that's going to give us a big hint at how the economic situation is, could be on the retail sales though, but a big hint before the budget, which is on the 27th, is it, Ryan?
Yes,
Was the end of
yes.
last week, right? End of next week. So yeah, we will still be in preparation of the budget, right? So it could be that this cable is just going to yo-yo a bit here, and then I'm thinking about yeah, maybe 130, 120, but especially 130.95 down to maybe 130.85 or so. That should be somewhere, just waiting for what's to happen. That should be somewhere your range to observe to start the week here. Dolly and Ryan already covered. Aussie and Kiwi pretty stable. They're both trying to stabilize. What is to be noted on both still, of course, euro dollar is a bit lower as well, but we have a few difficulties to hold levels. Every time we get up to 65 and a half, we can't hold up there, and it immediately comes back down on the Aussie. Kiwi does relatively the same, although we are in ranges. Okay, so for as long as this 56.30 holds in this is 56 and a half, but here this 56.30, of which it bounced, we are in a range, and but the same thing kind of shows up as in the Aussie dollar. You get up to that 56.80, 90, and we can't get above that 57. That should be the next step to watch. If we get above 57 figure 5, then we can start to push higher. So everything is looking a little bit the same for now. Went up to levels and then shying away from it. We are neutral, but we haven't broken levels that could show more weakness in the dollar. And all the dollar pairs are looking pretty much similar if you look at them to start the week. Quick look at euro sterling. Not a lot to say there, although we are starting to see dips on Wednesday, dips on Thursday, dips this morning in the low 88s. They seem to find already a few buyers. Obviously, for as long as we are above this 87, 50, 65 line, this break line, it's still bullish medium term. But this market is I guess we are taking a bit of a breather. I wouldn't even be surprised if we have a little look back down there, but without breaking it. It's all a bit rangy stuff, data out of the UK rolling in over the course of the week. But I'm not sure that before the budget we can break above this 88.65 again. It does look like this market is needing a bit of a breather as well. Quick look at what's happening on the metals. Um, Bit of a similar kind of picture, but the yo-yo obviously in those instruments is bigger than what we see on in FX. Last week on Friday we had a pretty big drop in the metals again. Again, if you want to have a look at really on the day what is happening, keep half an eye on what's happening in platinum as well, because most of the time it's a bit of a front runner of what may happen in gold and silver a bit later. I would say before the US data, I think this could be a resistance, decent resistance here between 41.30 and 41.45. Perhaps this, to me, I don't see too much reason for it to push through unless we have like geopolitical news also, which sends more tension again into markets. So I'm looking at it more from a yo-yo rangy point of view, with somewhere 4,000, 4,020 as the underside of this yo-yo that we need to monitor now. If we would get under 39 three quarters again, that would look a bit strange for long term, or not long term, for the longs, I'd say, and we may see a little bit of a decline more. The interesting one, and on Friday, well, my update on Friday was that we can be in a process of transposing this range up to the, we flip it over and we start to form a range on the upper side of the correction that we saw in October. Okay, so Friday could be a first confirmation that this is happening right now. We had a dip down to 50.09, 50.10, let's call it. Overnight, we again came close to 50 and we bounced. So this may be an indication in silver that we are just flipping the range over to the top end of that correction here. Just monitor what's happening around 50, okay? Another dip down there and finding buyers again is probably going to confirm this kind of picture going forward. Again, here I'm not thinking, unless we see a bit of a deeper decline, like on gold, it's all possible before we get the US data. But more than a yo-yo, I'm not expecting at the start of this week. No, I'm not saying silver is moving opposite to gold, Hannah, at all. I'm just looking at them from a little different angle. With gold, gold is a bigger market than what silver is. So we see we can see some different moves. People they of course are going to move somewhere in tandem with each other, but this is much more, I would say, of a speculative. There's much more people in there. I'm really I'm finding it difficult to look at stuff like people trying to find things in the gold silver ratio. Yes, it moves, but it just moves because silver is a smaller market at times as well, and we see that from the amplitude in percentage of what's happening in gold. I'm just looking at what's happening here in silver, and just a bit the same of what was happening around 47 and a half on those little attempts lower here, and then we had this move higher. It could be because one attempt, second attempt, and another one overnight. It could just be that silver is building or seeing more buyers. There is a lot more going on in on the supply side of silver than it is on gold. On gold, there's a lot more central banks, etc., involved than on silver. So I'm looking at them in a bit of a different daylight. Each of them, okay, each of them. I saw this question about Hannah again, Peter Thiel sold all of his Nvidia shares. Yeah, Michael Burry also sold Nvidia and then closed his fund. I was just looking from a distance where Nvidia trades. Is still at 190. Yeah, those people can have a good vision, and yes, there is still a lot of money to be invested in those stuff, and so we don't know the returns compared to the money invested. And by the way, Nvidia is reporting on Wednesday, I think, so that should be on the move then. And those people who took their money off, they must have made an absolute killing on it because it hasn't stopped going up in the past months or 2 years, right? So I don't know. Peter Thiel is not a bad guy at all. Worth following, of course. But I don't know what the next move will be because we will have the results on Wednesday. And with that, Ryan, I think that's enough for a Monday. Back over to you, mate.
Thank you very much, mate. Good
Oh,
stuff. As oh yeah,
I
what?
forgot. I forgot the Eurocat. I'll just do the quickly the Eurocat for Ali. Okay. Whoops. Why am I raising my hand instead of sharing?
Oh,
Just quickly on the Eurocat. We have seen a bit of a rejection of that trend line coming in the middle there, right? And right, also around the 61.8. It could be that we are just gravitating back towards the 162, but we do have October CPI out today, right, in Canada. So that's going to be a bit of a mover. Ryan, do you still have your dollar Canada in the books? It keeps on
yeah,
bouncing from the 140, right? So
yeah.
just keep an eye on that dollar Canada, just 140 and just below, because if that starts to break, then probably this one is going to be in for a retest as well. But in the meantime, still within the wider upward channel. Okay, and that's it for me, mate. Back over to you.
Thank you very much, and we'll call that a day for today. Thank you for coming to the Flow Show. It's going to be a busy week, so get prepared, get your levels ready in what you want to trade, and we wish you all the best this week. Have a good one. We'll see you tomorrow.